Welcome back to another episode of Coffee and Coin. We have a new type of podcast for you today. This is going to be our first ever March roundup. Well, our first ever roundup, but we're starting in March. And basically, we were talking about how there's so much that happens in the world and in our wallets. And I thought it would be fun to let our listeners in on what has been going on financially that month that you could be discussing, and what is going on with our personal finances, because it's a marathon, not a sprint. We're always working towards more wealth building. And so I invited Whitney, Pam, and Steph to join me on this roundup series. So the way I kind of thought about it was, I'm a business builder. I love building wealth through business. Whitney is a stock market lover. She is absolutely our paper asset girl. Pam has had a corporate career track, and so she is a salary negotiation awesome coach, starting to be. And Steph is our real estate guru in the community. So I thought it would be fun to have our different perspectives and our different positions to come together and talk to you about what's been up. So welcome, everybody.
Hey, I'm so excited to be here.
Thank you.
Just quickly, even though I gave a brief intro of why I have you on this pod, can you tell people who you are? Let's start with Whitney.
Hi, listeners. Fun to be back on the podcast in this new format. I'm Whitney from Team Factora, and as Allegra said, I'm your girl next door stock market investor. I've been investing in the stock market since 2007, have really focused on my account structure and setting up my auto contributions, making sure I have all the right stock market accounts, and, was able to grow my investments to 7 figures. At that point, I was like, oh, maybe I should diversify, kind of get into Steph's realm, do some real estate, in addition to investing in some business assets. But ultimately, the stock market's my true love.
I love it. Steph, tell us about you.
Hi, y'all. I am Steph Douglas. I'm a co-founder of Open House Austin. We're an education-focused real estate brokerage in Austin, and I'm also a real estate investor. I have 20 units, 30 doors, and started in 2013. And, kind of right place, right time. Austin has been booming since then. And so it's been really interesting with this climate. I'm really excited to talk to y'all and to Factora community in general, just because, things are happening right now. It's exciting and kind of scary. And otherwise, I think that's it. I just love talking about investing. I love talking about money. And really, Factora brought me to my paper portfolio. I had 0 paper before I met Allegra, and now it's a small portion, kind of like Whitney. Like, real estate is my first love, but I'm dabbling in the paper world right now.
I was going to say, you guys are just the opposite.
Yeah.
Whitney was all stock market and then thought, let me get into real estate. And Steph was all real estate and thought, let me get into paper. So Pam, what's your portfolio and world looking like?
Hi, everyone. Excited to be here. My name is Pam, and as Allegra mentioned, I am just a very regular, boring corporate W-2 employee. I'm a director at a tech company, and so have really built my my career around tech over the last 10 years. I joined Factora, Factora community, in early 2020, and since then, I've really sort of diversified the things that I get excited about. I've done some angel investing, like Allegra mentioned. I also do consulting on the side. Have recently started doing salary negotiation coaching, because if you see me around the Factora community, I am always there to give 2 cents about negotiating your salary and how to get more. So I would say I kind of feel like I dabble in a lot, some paper assets, some business investing, and then I own my primary home. So that's a little bit about me.
I love it. And y'all know me. I'm the founder and CEO of Factora. I love wealth building. I love women wealth builders, and I love talking money. So let's get into it. We decided that in March, the 2 biggest things that happened were a bank collapse and another year gone by without shrinking the gender pay gap, which it's pretty rough. I think I actually want to start there because, as Pam said, she's in the Factora community, always trying to help women advocate for themselves and make their full earning potential. So what do you guys think about this? The fact that we just celebrated another International Women's Day, and it was kind of glum news to have the data reveal there's been no movement in closing the gender pay gap in the last year.
Shocking, right? Because I feel like women have made so much progress in, the working world, in just like education. Like, women are definitely rising up. So why is it not reflected in the pay gap? I mean, the mystery is I'm sure stumping you as much as it's stumping me. Like, I don't have an explanation as to why this is happening. I'm stumped.
It made me really, really realize how important community is in this specific issue. If you don't know what your colleagues and your cohorts or even other women are making, there's no way that you're going to be able to advocate for yourself. And so when I heard this news, I was like, damn, we are so lucky because all of us make a lot of money. And so we just need, I feel like this podcast is addressing this issue in that we're going to talk about it. But like, I just feel so incredibly, I feel angry, and I feel like we are the ones, like, I just feel like we're in this position of influence, and like, we get to talk to women, and hopefully we can make our tiny dent, and maybe it can be even bigger because community is it.
Well, before I go to Pam, because I really want to hear what she's, you seemingly are on the front lines, Pam, because you're talking to women who are going through salary negotiations, and they oftentimes come to the Factora community right when it's happening. Like, you don't really think about it, and then suddenly it's been a year, you need to advocate for yourself and figure out how to get a raise, and then you need someone there. Pam's there. So I can't wait to hear what you're seeing. But I guess the thing that I'll say, what you just brought up for me, Steph, is like, I feel motivated. I don't necessarily feel angry. I feel like the time is now, and I'm so glad that people talk about money more and more. And to your point, community is everything, because the reason that employers don't want you talking about the money that you make is because that is what allows the inequity to remain. When you don't really know what your colleagues are making, or even what other people in your industry is making, then it's a gray area and you can continue making less, because the number that you go into a company at is the most important number, because all of your bonuses and annual increases are based off of that first number. And people get really mad at the company, but I don't. I own a company. I know that it's a company's responsibility to make the most money for its shareholders, not to make the most money for its employees. So the employee has to advocate for itself, just like the company has to advocate for its shareholders, which means keeping cost of expenses down, and employees are an expense. And so I know a lot of people don't look at themselves that way because we're humans. We don't want to feel like we're a cog in the wheel, but that is how business works. So it's so important that you advocate for yourself and that you understand what people are making in different industries. That's why in the first Well Circle call, we're like, what's your salary? And what is your career path? Because a graphic designer sitting in a breakout room with a tech worker are going to make different things. But hey, I might, as a tech worker, need to hire a graphic designer, and it's good to know what your rates are. So it behooves the company for us to be quiet and not share these details, not us. And somehow it's just been years of people thinking it's bad to talk about how much money we make. And I feel like the hood has been ripped off. We all know that is not in our favor now. So I'm stoked.
So I felt like, as I was like preparing for this episode, I got like so fired up about, there's so many ways to like approach this and talk about this. And Whitney, to your point, I think I was like taking a step back, and I saw the same article that you did, and saw that we haven't made any progress since like 2002. I think like 2002 was like the peak of the amount that like women make to men. And like essentially since then, it's been stagnant. So I am both not surprised, but I think seeing that like 2002 statistic made me reflect on, it wasn't until like 1974, and I ended up doing a little bit of research, that women could actually like hold credit cards in their own name. So we're talking about being only 50 years removed from that. And that both feels far apart, but it's really not. I mean, like we're all in our 30s. Like, you're talking to your probably maybe parents, grandparents who like remember the specific moment. And then as I was then thinking about like, okay, well, what did it take to get women to parity in the financial system? What is it going to take to close this pay gap? The other kind of reflection that I had was, one, the importance of community, but also the importance of allyship. Because like I can coach women all day long to ask for more money, but at the end of the day, some of the data is actually pretty depressing. That's like women get penalized more when they ask for money. And so I feel like almost a little bit of like my call to action would be to people who are managers. Because I think, Allegra, to your point, like at the top of the company, no one is really going to care about the pay gap. But like my sort of call to action would be like, if you're a manager and you are a dude, you know what the people under you are making, and you should be advocating for women on your team and like checking your own implicit biases on like, why am I paying like the white dude named Chad more money than like a woman on my team? So I think it's a little bit of like both, and like I want to encourage women to like always ask for more, but I don't think we're going to get anywhere without any allyship. Like that's what made the bill for financial like system parity be passed in like 1974 for women.
And male allyship, but also female to female allyship. We need both. And it's just like such a good reminder that yes, we've come a long way, but there's still a lot of catching up that we have to do.
Yeah. Did you ask for more when you got your first job offer, Whitney?
First job offer, I did not ask for more. What I did, because they brought us all in a class, so everyone got the same offer. What I did was went out and got multiple offers, and then I took the best one. Now that my career has grown and I know my worth, I would absolutely negotiate. Every job since, I've negotiated on grounds of my skill set and my value, but it is very hard to negotiate for your first job, like, right out of school.
Yeah. So on your first job, you didn't. What about you, Pam?
Also kind of similar. I started in public accounting, which is like very much every first year in your class makes the exact same amount of money. Now what happens after that, I left public accounting after a year, but you start to be, there's like obviously like performance, and you actually start to be graded against your peers. And I think that was the time to then ask for more money, but I didn't negotiate my initial like very first job out of school.
And Steph, what about you?
My first job out of school was a public school elementary teacher, and it's state pay, so they would have laughed in my face if I had asked for more money. But I started in the a public district, and I knew that if I went charter, I would make more money. So I spent 2 years in public school, and then I was making $43,000 a year, and I jumped up to $50,000 a year, and I just felt so rich. I was like, I loved it. But my way to address, there's a ceiling. Teaching, there's a ceiling. They started doing a merit-based pay at the charter, which is amazing. I loved it. I was checking all those boxes. I was like the highest paid teacher in the district. But I addressed it by starting a business. And so I feel so lucky to know people who are in the corporate structure and to know so intimately from y'all, because I've never worked in corporate. I've never done what y'all are doing.
Yeah. Well, first of all, I love that just in this group of women, we have such different backgrounds and how we started into earning income. I also did not negotiate for my first few jobs, like the first 3, really. And it wasn't until I had a boyfriend who actually helped me realize how underpaid I was, that he helped me formalize how I was going to ask for a raise. I was in sales at the time. He was like, you got all these numbers in your favor. And I kept saying, yeah, but they're telling me I'm green, I'm new in sales. And he's like, does not matter. Look how much money you're making them. You need to go and get more. I did. I got a $25,000 within 3 months. It was like in 2 chunks, raise to my salary, and then they clawed back my commission, which meant it was time to leave. But it was such a great allyship. You know, his learnings got to infuse me and my confidence, and then I took that and have ran with it ever since. But I do regret those first 3 jobs, accepting on the spot the offer that was given me, not even thinking anything but, oh my God, I'm so grateful that I'm getting this job. There was never a thought beyond that of, well, I should look up how much other people would be earning in this role and make sure I'm at the very top, because I'm going to do the very best I can while I work here.
That makes me think of like a tip, like to your point, your boyfriend at the time, a tip that I always give women when they're like, I don't even know what to ask for. Like with all these like salary transparency laws, you'll see the ranges. Like, I don't know if you've been looking at these job postings, but it's literally 100,000 to 250,000. It's like, what? Yeah. Like this huge range. But my tip to women is to always ask a trusted male colleague and say, this is what I make. Do you think that's like what I should be making? And they will either then share their salary with you, if again, it has to be a trusted male colleague, or they will tell you, no, you should probably be making $10,000-$30,000 more. And I think that tends to be really eye-opening for people. And I had a male colleague who did that for me early on in my career, and it was so helpful.
Yeah, I feel like there was some comments around closing the pay gap that was like, go out and ask a white male colleague what he's making in the same role and make sure that's what you're asking for. Find that guy.
Well, we know our male colleagues, they love to talk about money because it makes them as uncomfortable. So they are the right group to go ask.
Absolutely. And that's part of this, I think. I mean, obviously, patriarchy and all of this, societal things, but they're more comfortable talking about money, and they don't feel the shame that we were made to feel about wanting to have money. Men are supposed to want more money. And me as a woman, I remember feeling greedy. I remember feeling like I'm not in this for the money. No, I am. I want to have more money. And men don't feel that as much as we do.
Yeah, that's so true. I think that there is a huge fear when it comes to women and money, not wanting to have stress, but not wanting to have too much. And in Factora, we're all about saying, have too much. Because what does that give you? It gives you additional opportunity and the means to give back. Women are so generous with their money. So the more we have, the more it can go into our communities and into the causes we care about. And the real thing I care about is more money funding women businesses. And right now, like we've all heard what's going on in venture. It's only like 2% of women founded companies that are getting venture dollars, which is kind of a perfect segue into the Silicone Valley Bank collapse. Because for those of you listeners who aren't too familiar, Silicone Valley Bank was really a top venture bank. And this is part of the demise situation, because you should be more diversified in who your debitors are. But they were really focused on the venture industry and banking, not just VCs, but VCs portfolio companies. So Silicone Valley Bank got taken over by the FDIC midday on Friday, March 10th, which is highly unusual to not even let the bank finish out a day in the markets before seizing them. And what do y'all think about that? I'd love to kind of go around and talk about how you felt and what your reaction was when you first heard the news about the Silicone Valley banking collapse.
I, no joke, was in the epicenter of Silicone Valley when the news broke. I was driving on Sand Hill Road, which for those who don't know, that's where all the VCs are lined up. And so it was like crazy surreal to get the news like where I physically was in the moment. And like, I couldn't help it. I admit I had immediate flashbacks to 2008. I was like, here we go again. Like another bank collapse, like another crisis. But, you know, that immediately was put to rest when I saw, okay, the FDIC immediately stepped in. You know, this is a bank run due to a concentration of very similar connected clients as opposed to more of a crisis around taking risky, fraudulent lending practices. So again, like very shocking news, but also very different from the financial crisis.
Yeah. I was on the opposite side of the US. I was in Miami at a conference and I was laying by some palm trees, also having all the feels, wondering if this was going to cause some really horrible downstream effects. And, you know, downstream is never ends, right? So we don't actually know what the full fallout will be. We're recording this on March 23rd. This only happened 2 weeks ago. But I do remember thinking, this is why it's so important to be aware of not just your personal finances, but how the financial industry in the place that you live works. Because I don't know if a lot of people understood what the FDIC is and what it is meant to do and why it would be taking over the bank. And so I immediately took to my Instagram to start telling people like what it is and why it's important and why you want to make sure that your funds are FDIC insured when they're held at a bank. So Steph, let's go to you. How did you feel when you heard this news?
So I'm always looking at things through a real estate lens, and the economy has been way too good for way too long. And that's why last year in May, the Fed hiked the rates double what they've been for the past couple of years. And that basically halted our buyer streams. And like people were really nervous about getting into real estate because interest rates were so high. So a little bit of backstory on that. But when I heard this, basically they've been waiting for the economy to slow so that they can then decrease the rates, which will then help the mortgage rates go down. And so when I heard this, I was like, oh, yes, maybe now the Fed will decrease the rates and the mortgage rates will go down.
You're like, it's finally happening. Like,
yeah,
we knew something was going to break with these rate increases. We were just waiting to see when and what was going to break.
Exactly. And definitely not wanting anybody to suffer because of this, but just that was my first thought, like, oh, maybe this will be the thing, because every report, the inflation's not slowing enough, the job market is still really strong, like all of these things are continuing to go really strong despite all the talks of an impending recession. So that was my first thought. And then I got a call. We had submitted an offer for good friends on a house and they didn't get it, and we submitted a backup offer. I got a call Friday at 3 p.m. and they said the buyer that was under contract lost his job due to the bank. And I was like, oh my God. So like immediately I was very excited for my friends, but then I was like, wow, people are really taking quick action. That is scary. So I kind of had this like pendulum swing of like, okay. And then I called my friends who are both in tech and I was like, I have some great news. You getting the house? And they were like, actually, we're kind of nervous too.
Yeah.
So that was my Friday.
Wait, so did they move forward with it or did they decide not to?
Roller coaster of a weekend, because over the weekend it was made clear that everyone was going to get their funds back and that, you know, it was going to be fine. And so initially they were like, no, we need to back out. And so I was like, just take some time. You have an option period. You're going to, you know, we have time to back out. They said, we're going to back out, canceled their inspection, and then came back and said, actually, never mind, we're going to stay with it. And they close next week. So
Wow.
we're good, but it was wild.
Yeah. I think that sums up what that weekend was like for everybody.
Totally. And I also think it's so interesting because in that exact example that you just shared, it's it became obvious to me that a lot of people actually don't know where their company banks, right? So they weren't sure if they worked at a tech company, if they were getting paid the next week when they heard this. And so, yes, the FDIC stepped in and made sure that everyone's deposits were going to be available. But oftentimes you get paid through a payroll system. You don't even see what bank your company banks with. So you just have complete trust in your company, which back to one of Factora and my personal values is question the quo, like just question beyond what you can see. It's important to think through that stuff.
I'm curious, Steph, on the, it was like this happened 2 weeks ago, and then we were all kind of waiting for the announcement. What was it, yesterday or the day before, if they were going to raise the rates again? Because I think everyone was kind of like, hey, look, there is some volatility happening right now in the banking system that has reverted from SVB. So I'm curious your perspective on like the Fed continuing to raise rates despite this happening.
Yeah. So they raised rates not a wild amount, of 0.25%. And I do think that we're seeing a little bit of a crest. I'm hoping that this is the peak and that there is, and then from now we'll see, decrease in rate from the Fed moving forward. Again, no one has a crystal ball, but that is kind of like, I feel like the consumer confidence is cracking a little bit. And so they're going to be able to relieve that. The rate hikes, I really hope like I'm always, Allegra can attest, I'm always optimistic. And so I always have like a very rosy outlook on things. But so that everyone should take that with a grain of salt. But I feel pretty confident that this is going to be kind of just a blip and we'll get back to, I think we'll get into the low fives by the end of the year.
Now, where are we right now? Where are you seeing rates?
Low sixes, and you can buy points into the high fives.
It's interesting though, because with the Fed, raising rates, even though, by a smaller margin than they had originally implied, it's still saying like inflation is bad. It's still bad enough that we're going to let the banking system go through what it did. It cracked a little bit, but we still need to raise rates a little bit to get inflation under control. So I'm with you, Steph. I want to be optimistic, but I just also think it's interesting that, a huge, fallout like that didn't even pause a rate raise.
Wild.
And Steph, what has been the typical average for mortgages over time? Because I think we're all used to kind of coming up in this super low mortgage rate environment. I have less than 3.3 on all my properties, but that's not typical.
No, those lows were incredibly unprecedented. And over the, past 50 years, average is much higher than where we are now. I think the average somewhere between 8 and 10%.
That's what I was going to guess, but I couldn't remember, so I didn't want to misquote. But if you go and talk to your parents about how much they were paying for mortgages, it's shocking.
12%.
I know my husband's parents paid 10% for their mortgage.
Yeah,
we're spoiled, I guess,
Yeah,
we are spoiled.
Definitely. And when people say like, oh, well, mortgages were less expensive back then. When you look at the actual relation to what people were making, they weren't that much less expensive. It's really, really comparable, the ratio of mortgage to salary. So yeah, so like we're very, very spoiled, and that is kind of why this is happening. The pandemic made the government really like lay it on so that it would aid people in this time of economic stress, and now we're suffering the consequences.
Next month, we need to check back in with you and see if more real estate buyers have hit the market.
Yes,
because of this.
We've already seen an uptick in mortgage applications, so we're already going to have our biggest month of the year, in April.
So I guess to wrap up on SVB, have there been any personal actions that you've taken as a result of this bank fallout?
I will say that, like Whitney, I had a lot of fear on Friday. It was like Friday, 11 a.m., the news broke, and I was like, is this going to be like 2008? I'm pretty diversified in my paper assets, so just in terms of being worried about the stock market overall, I don't have a lot of fear with that. but we do have some like holdings in my partner's like employer stock. And I was like, I think we need to sell it all. Like I immediately, so like we were like on a walk with the dogs, just talking about everything. My partner is also in tech and knows the finance space pretty well. And we were just like talking, and I was like, I think we should like sell it all. And he's like, and I was like, can you run a few models for me to see how much we're gonna lose at what point? I'm like such a finance person. I'm like, okay, let's run some models. But thankfully I took that afternoon and was just like, I don't want to make any immediate, decisions. So even though I had that fear and I was still like, let me just like look at everything, see how I'm feeling. We like took the weekend. I talked about SUB to literally everyone that I knew that weekend. Like if you were talking to me that weekend, I was giving you like the lowdown of the fractional reserve banking system that we have in the US and how 50% of startups bank at SUB, and like no one who works at startups really knew that. So anywho, all of that to say is did not make any changes, though I will say I did take advantage of some of the downturn with specific banks. So I did buy some Charles Schwab stock specifically because they're in for the long haul. I'm not worried, but they took a really big, I think like a 30% dip. So I just bought a little bit of Schwab stock for fun.
Okay, I love that. That is definitely the taking advantage of, crisis situations is when investor confidence goes down on an industry. It means there's going to be less demand, more supply, prices are down. It's a great time to buy. It feels so counterintuitive if you're not in the financial headspace to understand that. But for us, it's awesome, right? And like, I'm also very bullish on Schwab. I actually just consolidated everything over to Schwab, and it is the ugliest, most antiquated, literally the worst user interface of them all. And yet I don't care. That's not what matters to me. What matters to me is longevity and stability. And so I guess just to wrap up the SVB thing, I just want to tell you guys what the FDIC stands for, because I didn't say that in the beginning, but it's the Federal Deposit Insurance Corporation, and it was created by the Banking Act of 1933 after the Great Depression to try and restore trust in the American banking system. So what it does is it gives you insurance over your deposits at banks that have the FDIC insurance. And typically it's for $250,000, but banks can have more than that. Factora actually banks with a bank that gives you up to $1 million in FDIC insurance. And then there's also something on the flip side called SIPC insurance that kind of does that, but for securities. So that's the Securities Investor Protection Corporation, and it's going to protect customers if their brokerage firm fails. So just wanted to make sure you guys know a little bit about that.
Anything? Because I've had so many questions over the weekend of people asking, should I move my investment account? And it's like, no, the FDIC is for cash in banks, right? Like that does not protect your investment accounts. The SPIC is for your investment accounts. So when we talk about bank failure, just make sure your bank is FDIC insured. Make sure you have under the FDIC limit in that bank account. If you have more than that, either open a bank account at a different bank or add a joint owner on that account, because the $250 is per person.
Yeah. So just to give numbers to Whitney's example, if you do bank somewhere that has the $250,000 insurance offer, but you have $300,000 in the account, you can move $50,000 either to another bank or to a joint account. So it's the separate account that is insured.
Yeah. And then I think also just with that piece as well, like I think because this is really the first time like in the last 15 years, we've gotten a look into like how fractional banking works. It essentially works like you deposit $100 in the bank is going to keep $10 in the bank for you, and they are going to lend and invest the other $90. Now, like the government regulates that, and since like 2008, there hasn't really been that kind of like risky lending that has occurred where like money's just going to go up in flames. And that's why like FDIC is so important to have that insurance. But your brokerage account works differently. You know what I mean? Like you are investing, putting your money. It's not like somebody else is like messing around with your money. It's all because of the fractional reserve with the banking system, specifically with your cash.
Well, it's risky to have a ton of cash.
Yeah.
Invest it.
That's I was like,
Totally.
if anyone has $250 sitting in the bank account, let's rethink that strategy.
Yeah. I'm never at
Whitney's
at
gonna
that
find
risk.
you.
I was
She's
like-
gonna come yell at you.
Have a coffee money date.
Yeah.
Yeah, it's so true. One, even it relates back to the gender pay gap. You know, we don't have to make as much as women, or even when we're not making as much, if we're investing more, we can be earning more. Like that's another avenue for us to get to that equitable wealth building spot. And this goes again with understanding your personal finances, understanding the financial system. Don't just trust in banks, because I don't know why actually people think banks are so safe and great. I'm like, you're constantly hearing something in the news like this bank is writing fake accounts to tell their shareholders that they've grown X much last quarter, and it's all crap. Or this one has really bad hiring practices. So like they're not, in my opinion. Plus 2008, we saw a bunch of issues. Actually, did anyone know that I thought this was so interesting. Let me not misquote, but there was a guy at SVB who was formerly, oh gosh, here he is. Joseph Gentile was the chief administrative officer at SVB Securities. And prior to joining the firm, he was the CFO for Lehman Brothers when they fell.
I saw that. I didn't read up on it, but yeah.
Wild.
What a
Wild.
coincidence. Huh.
Okay. Well, I feel like we've done a lot of talking about SVB and the gender pay gap. Let's talk about what's happening in your wallets. I feel like a Capital One commercial. Has anyone got any cool investments or financial changes they're making? Maybe we'll start with you, Steph.
Well, this is a huge confession, but I had my auto invest on crypto for, every week, which is silly, small, tiny amounts of crypto. And Coinbase is so hard to figure out. This is not good. But I was just like, okay, I'm just putting it off. And so I was auto investing into crypto, and crypto just shot up because of the bank stuff. And I was like, oh, okay, great. But very small amount, micro. That is not even worth talking about. We just bought a house earlier this year. We have a 5.99% interest rate, not great, but the property was good enough to where we are cash flowing that property. So I'm an example of buying in any market can be a good deal with any interest rate. You're not about, it's not about the interest rate. It's about how much you can cash flow. And then I'm investing heavily in
that quote they always reference. You marry the house and you date the rate and you marry the house.
Yeah, exactly. The refinancing is always a possibility. Like I know there's so much hype in the zeitgeist right now. It's not a good time. In this economy, you're not buying, all of those things. And it depends on your situation specifically. So our company is all about letting people know their options. You don't have to follow the crowd. So I'm going to continue to buy, but I also, in my new paper journey since Factora, I'm investing heavily in my 401k since it's pre-tax. And we just got 401ks as company owners, which is exciting. And then also in my taxable brokerage, just like kind of funneling as much cash as I can into the fire sale that is the stock market right now.
I love it. And just for listeners, Steph bought a primary residence that also has a second unit on the property. So that's how she is choosing, or that's how she's able to cash flow on that house. Because we talk a lot about house hacking, and this way people can be not in her home space, but with that second property, which is your purpose of why you bought that place.
Yes.
So
Well, I bought this one last year, and then we closed on one this year as well. But yeah, since the rates have gone up, I've purchased 2 homes. And one was my primary residence that has a garage apartment, and then another one was a 2-unit with potential for 3-unit, and it was just too good of a deal to pass up, even though we have a higher than recent interest rates. Again, over the time average is much higher, but yeah. So as long as there's a plan in place, house hacking is so helpful. It just is not ever a good or bad time blanket statement for anyone.
Steph, always be buying.
Yeah.
All right, Pam, what are you up to?
Yeah, great question. So I took a 6-month sabbatical last year from like July to January and started a new role about 2 months ago. So really my focus over these past few months, and I think over the next few months, is to rebuild like my emergency fund back to what I want it to be, which is around $25,000. And then the other piece that I'm actually curious to get y'all's thoughts on is, and I asked the Factora community this, which was always like so great to get people's, thoughts and kind of use the power of community. But I've worked in tech like my entire career, but it's always been at startups. And so my husband transitioned to a public company, and we got, a large portion of his compensation is in stock. And I asked the Factora community, I was like, when a large portion of your compensation is in stock and when the stock vests, which is usually at the year mark, you get an entire year's worth of stock, and then it vests like quarterly after that. I'm like, what do y'all do with that money? And the most compelling thing that I heard from someone was, think of it as a cash bonus. And if you would not invest 100% of that cash bonus in the company immediately, you should just sell. Like, don't hold it, just like immediately sell. And what did I do? The day came and I was like, I'm going to hold really tight to this investment strategy. I feel really strongly, but the share price had dropped 30% since the high, and I decided to hold. And that has not been the right decision. It's leveled out at this point, but I really wish I would have just like stuck through that and then just called it, because I think I just saw the high and I was like, maybe if we wait, it'll make sense. At this point, it really does not make sense. We should have just sold that day that it invested.
And so I have a question. Will a part of your partner's compensation come annually with that? Or it was just this one annual upfront?
So it's stock that vests over 4 years. So essentially 1/4 of his stock came annually, and then the rest is going to vest quarterly from now on. So we get 3 more times. Obviously, it's not as much as an entire year worth of vesting. But yeah, that's how it works.
And there's no holding periods. As soon as you have it, you can sell it or keep it.
As soon as you have it, you can sell it, which is like what I wish I would have done. At this point, we'll take a $10 loss per share. It's not the end of the world, but we absolutely should have sold.
It's so funny because all I can think about is the All In podcast, where they always have the terminology, just wet your beak, just take a little off the top. And it's kind of that theory, right? Because you didn't choose to invest in that company. That's just the company that your partner works at. And so when the cash is available, it's yours to take off the top, a portion or all of it.
It just goes to show that even, educated investors are subjected to behavioral biases.
Yeah. It's all psychology, right? I knew what I wanted to do. And then the day came and I was like, maybe we'll get $5 more extra per share. I mean, no, we're not talking about a lot. Anywho, but it's a lesson learned. And now we're going to sell so we can fund some renovations that we're doing around our house. So
that's a great use of a bonus or that's awesome.
It is so interesting though that Whitney brings up the psychology, because I find myself sometimes being like, I'm a hodler. I'm a long-term holder of every asset I have. And I don't want to get stuck in that thinking, because there are times where you should let go of different assets, especially if they have built up in value and it makes sense for your personal goals.
But
So,
even
good
if
reminder.
they're losing, right? Why do we want to hold on to our loser longer if we can move that money to an investment that is going to make us more money? So it goes both ways, for sure.
It applies to real estate too. I mean, it's not just stock market.
Yeah.
Although how many houses have you sold Steph?
So few. I know. I'm taking this advice. I'm taking this in. I mean, we've talked about it's so hard for me to let go of something because I know I'll just look at the value in 10 years and hate it. But I think that it does apply to this. I mean, I will employ those funds to buy 2 more houses or whatever it is.
Yeah.
So yeah.
10 years. My problem with selling real estate is I would be looking at the Zillow and the Redfin and like putting the ratings in a spreadsheet every month.
Yeah. No.
So I'm trying to sell some real estate right now, and have to say the market's been a little slow. We haven't had many buyers come through, so it's a little bit stressful. But we built an investment property out in Texas Hill Country. We just finished it end of last year, pretty much the worst time to finish and put it on the market, but we did. And I think it's been on the market for about 90 days. And we've had some people come through, but honestly, there's not a lot of shoppers right now. There's not a lot on the market right now bringing the shoppers to the market. So, we're extending our loan to get more time. But yeah, I admit it's a little stressful.
And do you have any like backup plans, Whitney, as you've been like, I'm sure there are like options of what to do?
We could buy the house. My husband and I talk about, we're nomadic right now anyway. So we're like, well, we could buy the house and move in really. It actually like might work out perfectly. That's not necessarily my number one choice, but it is a beautiful brand new home. I definitely wouldn't mind moving in for a little bit, but again, that wasn't the plan. So that would be the plan B.
Yes. This is what happens when people don't want to sell or don't have to sell. At this point, they're not going to put their house on the market. And in your case, this is just bad timing. But like usually most people who sell their houses, they're just like, oh, maybe I want to move, but they're not doing that right now. So inventory is not great. So I'm so sorry. That's the worst, but you'll figure it out.
Yeah. I need some, if anyone has tips or support, let me know. I'm not like totally freaking out. Like this was the calculated risk we took and we're in fine financial shape. But I do feel for people who are they need to sell right now for whatever reason, starting a new job, have to move location, like need to sell to buy, whatever it is. I feel for you. It's tough and you're not alone. You're not the only one that feels this right now.
Are you doing anything else? Any other money moves for you these days, Whit?
Mostly that is my number one priority right now. As a lot of people know, I'm on sabbatical, so I don't have the income flowing in, which does kill me a little bit with the stock market the way it is, because like I would love to be dumping money in the market right now. I just don't have as much at my disposal. But like, think about how people feel about the stock market right now. They are fearful. What does that mean? That means that's when you should get greedy, right? Like this, I'm like salivating and I wish I had more cash, but really I'm in a state of just monitoring my accounts and optimizing my accounts. And one fun fact, I was looking at my high yield savings account and I discovered I did not have a beneficiary tied to my account. So today is a good day to go check on all your accounts and make sure you have beneficiaries set up, because like usually I'm on top of that stuff, so I don't know how that one slipped by me. But that is your daily reminder to go do some administrative maintenance on your investment and banking accounts.
That's a good tip, and I actually just did this because, as I mentioned, we're consolidating we had way too many different brokerage firms, so everything is going into Schwab now for me and my husband. And then after we put our personal accounts in, we then shared with the other person so that they could have full access. But you still have to set beneficiaries on his to me, on mine to his. And man, it's a process. Like I'm telling you, Schwab is got to be the ugliest brokerage firm out there, but it's the one we chose. It's the one we're sticking to. And then the other thing I'm doing with my finances right now is checking out the coolest net worth tracker that I have yet to find, y'all. So it's called Kubera. It is free for a trial, and then you can buy it as an individual or a family plan. It lets you easily see and put all of your investments together. So I haven't really found ones that allows you to track angel investments, Pam, but this does. Also real estate, you can make different sheets. It's kind of hard to explain, but I will show you guys all screenshots. I think I've already texted Whitney and Steph. Oh, and the coolest part that I absolutely love is it lets you share a link to your portfolio, and you can toggle on and off what you want other people to be able to see. So they have to see the top net worth assets and debts, but then you can allow them to see all sorts of other graphs and insights. And it too has a beneficiary system that if you don't check your account for 45 days, it will start emailing your beneficiary to make sure that you're still alive. Isn't that wild? And then it can transition everything over to them. You can also have your life insurance policies in there, which we are almost done setting up. Jake and I are both getting a $1.5 million life insurance policy for 30-year term life now that we have a daughter. It's taken so long. We've been literally in process of doing this for 7 months that our daughter has been alive. So fingers crossed, it's almost, crossed the finish line. But those are my updates.
Man, I'm interested to hear about the life insurance. I'm sure we can talk about that at a different episode, but I know are you using that as an investment vehicle?
I'm using it as a safeguard for her. She'd be able to pay off debts and be okay if one or both of us were to pass, but I am able to convert it at any time, so it could turn into more of a wealth building opportunity.
Yeah.
So with that, I want to
protect those assets.
Protect those assets. So thank you all for joining our first March Roundup. Listeners, if you like this, let us know. Either leave something in a review, or you can always find us on Instagram, Factora_wealth. And I will see you ladies in our community Slack channel.
If you enjoyed this episode, come join us in a Wealth Circle. It's our live, online, 12-week course and community where we teach you how to create a personalized financial plan alongside hundreds of other women building wealth. It will change your life and your money for good. You can apply at factorawealth.com/wealth circle. That's factorawealth.com/wealth circle. See you in the next episode.